Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. Listen, if you're an avid listener of this show, I need a quick little favor. Leave us a rating and review. I want to hear what you love about the show, but also get some honest feedback so we can make it work a little bit harder for your investing goals. And if you haven't done so already, be sure to hit that subscribe button so you don't miss an episode. We've got a really fun episode today. We're going to be talking to Jordan Fisher. Jordan Fisher has nearly 2 decades of experience acquiring, redeveloping, and managing multifamily properties. Now, as the principal of Next Wave, Fisher spearheads the company's investment strategy and oversees property selections, renovations, and repositionings. Now, prior to joining the executive ranks in commercial real estate, he was the founder and CEO of TPG Consulting LLC, a web development and digital marketing agency. And under his leadership, the firm grew from 2 employees to over 110 with revenues over $21.5 million. Let's welcome to the show, Jordan Fisher.
All right. Thank you for having me.
Absolutely. Hey, Jordan, I went over your bio at a very, very high level. Take 2 minutes and fill in some of those gaps.
Yeah, I grew up in Southern California, still live in Southern California. Um, I went back east for college, went into the Army, got out of the Army, and I got into consulting mostly because I was good at math, and they took a chance that I'd figure out IT. Never really had a like burning desire to get into management and IT consulting, but it was something good at, and I kind of liked it. And as I was in the Army, I kind of ran into some credit card debt. I was stationed in Hawaii. I think my salary was a second lieutenant was like 1,700 a month, and I just couldn't live on that salary. And so I got out, got a decent job, and you travel a lot as a consultant, and all those per diems they added up, and I paid off my debt, and I was like, I don't really want to ever be in this kind of debt again. And so, I was like, all right, well, I gotta, finally have a little bit of money to invest, and I was like, well, where do I invest this money? And I dabbled in the stock market a little bit, and I felt like, everybody out there knows way more than me. The guys that do it for a living, right? There's guys that study these stocks and they study the technical aspects and they study the fundamentals. And I'm the last guy to know anything. So I kind of just got into looking at apartment buildings. My dad was kind of ancillary in the business, and so I thought, let me take a look at this. Some of more I can understand a little bit more. And now, back then at the time, I was living in Huntington Beach and I was working up in Torrance as I was founding my IT company. And as you do it, you drive through a city called Long Beach. And Long Beach is not a particularly nice neighborhood. But if you go from like Southern California, like Santa Barbara down to San Diego, it's like the one beachfront property that's a bad neighborhood. And so I kind of had this theory that, like eventually it's going to turn, and so I started, on my way to work, driving apartment buildings and that were listed, and kind of getting an idea for rents and getting an idea for what a good price would be. And so I bought my first triplex. It was like $20,000 down, and I just bought it, And you fast forward, and I started and sold an IT company. And when I got out, I was like, what am I going to do with my life? I don't really want to do any more IT. I kind of had a non-compete. And I met my business partner, David, and we met some brokers that said, hey, we can probably help you raise equity. You can do this as a professional. And that's how I kind of learned about the syndication business. And that's when we went, full speed and full time into real estate investing.
Yeah, man, that's a fun, interesting background, right? Going from kind of the military, getting credit card debt out there in Hawaii, moving out and getting a job in consulting, making, some money, paying off that credit card debt, and then starting to finally invest, starting with that three unit triplex, as you called it, out there in Long Beach. And then ultimately realizing that, once you sold that IT company, you were able to turn this into kind of a full-time career. Let's start kind of where we're at today, right? Talk to me a little about Next Wave Investors. What exactly, is your focus? What markets do you focus on? Give us the lay of the land there.
Yeah, so we're in this industry we're not huge, though it's big to me. We've got about 1,800 units, and we're in primarily the Western markets. So we're all over the place a little bit in that we've done deals in Nevada. Currently, don't own anything in Nevada. Vegas was our first market, and but we don't currently own anything. We have stuff in Arizona, Texas, Utah, Oregon, and Washington. And primarily the way we pick our markets is we want David and I are very hands-on. We're active and asset managing, and we're still the ones that do the acquisitions. So it's got to be like a direct flight from Orange County. So it's got to be a decent sized market where you feel like there's enough transactions. Maybe you get some scale. You know there's going to be a follow-on buyer. It's not really going to a tiny market, though. We've done that. Um, and something that we can get to in and out of because we like day trips. We don't want to be away from the kids for the full week, and so 1 day, 2 days a week is what we limit ourselves to. And so even though you hear about some great markets, sort of east of the Rockies, we just feel like it's just you spend too much time on an airplane getting there, and so we kind of limit ourselves to the western side.
That makes a lot of sense, right? I mean, logistics certainly play a role in it, and there's a lot of
Yeah.
growth kind of in the western side of the country as well. And the markets you mentioned, Arizona, Utah, Oregon, Texas, these are markets that have seen a lot of growth. So that makes sense to me. So 1,800 units, that's definitely a sizable portfolio for sure. Are you looking
Mhm.
at A class properties, B class? Do you do value add? What's your strategy?
Yeah, so we're value add.
Okay.
We feel like we try and create some value. I think that's the best way to do this business because otherwise, I, if you just buy a property and you just hope the market goes up, I don't know. I don't feel like I'm necessarily earning my pay. So, we really try and create value and create a return for our investors and, make sure that they're happy. And value add strategies, I think, are mostly the same, right? Everybody wants sort of that B class asset in the A neighborhood. So, in a perfect world, we're buying stuff built in 1995 to 2005 that, is in great condition and, just needs to be modernized and updated and improved. We don't ever get center of the strike zone. There's always something not, the neighborhood's not great or, the vintage is 1973 or something. And there's a reason because the perfect deal, they're smart sellers, and there's a lot of other, groups out there like ours that want the property, and it gets to a price where we can't make sense of it, or we're not going to hit the returns for our investors. So, there's always something weird about it that we wish we didn't have to deal with, but that's kind of where we make our money.
Yeah, I really like that you call that out because I think a lot of people are searching for that perfect deal. And it's kind of like a unicorn, right? If you find
Yeah,
a B class property, A class area, value add, but not deep value add, just
yeah,
paint and carpet, right?
yeah,
Area is great, great. You're buying off of current performance, current NOI, not pro forma,
yeah,
and it's just really difficult to find that. And I
yeah,
think the insight there is that when you're in a competitive market, deals are created, not found. So you have to have a creative eye to look around and see what can you do, what's your business plan, but then also figure out, what are your non-negotiables, right? Maybe it's location, maybe it's what you do renovation wise. So
yeah,
figure out what it is that you won't negotiate on, but you have to be somewhat flexible because if you go in with a very tight checklist, it's like trying to find a spouse. If you got a checklist, they got to be this height and this weight and love this sport and they got to
yeah.
be vegan or whatever. It's okay. You got to pass a lot of really good options that you won't
You
even
are.
consider because you're so focused on this checklist. So, be a bit open minded, certainly have criteria. There's nothing wrong with having criteria. But on the same note, you have to also understand what's out there and looking at the inventory, what's available so that you can actually do the deals that change your life. Because the goal is not to buy a 1995 150 unit apartment complex that does blah, 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 blah. The goal is to earn passive income, you know, create
Hmm.
some wealth, reduce your tax liability and diversify from the crazy stock market. That's the goal, right? The goal is to build financial wealth, not
Yeah.
necessarily to buy this specific property type. So just stay a little bit open minded. I think it's a really good insight because people do get really fixated on that criteria, and sometimes they miss, the forest from the trees there.
Yeah,
Talk a little bit more about kind of, how you're able to navigate these different markets, right? Because Utah, Texas, Arizona, I get that they're all on the West Coast, but they're still pretty far away. I mean, there's still a lot of
they
different
are.
nuances and
Yeah,
different
it's
brokers and different relationships. So how do you manage all that?
so, I mean, it's tough, and we self-manage. So,
Oh,
we've
wow.
got our own employees, so we're constantly dealing with turnover and hiring and managing, and it's a headache. It really is. And, we try and, we don't really want to be in this many markets, right? And so, but, we're in business to make money for ourselves and our investors. And so, we really tried to focus on, our first market was Las Vegas and then Phoenix, right? And those just became hyper competitive
Yeah.
markets. And it's not that we don't believe in those markets. We really do, but we also have to believe in the deal, And so they got to a price where we're just like, I mean, in hindsight, you wish you would have bought all of them because the market outperformed everything we did. But when we were looking at them, we're like, how we don't get these prices. And so then you start looking for other markets. And so it really, those markets are big enough for us, but they just got a little too, over their skis a little bit. And so managing it sucks. We do have a decent portfolio in Portland and a decent sized portfolio in Spokane, and then a couple chunky assets in Texas, but you know it's not ideal. I mean, it really is not ideal because you don't want to go to six cities. We have an asset manager that handles a lot of the day to day for Utah, but the reality is it means a lot of day trips to a lot of
Yeah.
cities every week. There's a couple trips, and it's just the way it is because we're looking to do deals that we believe in, and if one market becomes sort of tapped out, then we got to look for somewhere else.
I appreciate you being candid and sharing that, hey, the goal wasn't necessarily to expand to all these different markets, but when you are struggling to find deals in your core markets, you do have to start looking elsewhere for those opportunities. And there's almost a kind of a conflicting experience where it's like, well, you go to different markets, but because demand is so strong in those initial markets, but
Yeah,
maybe you're better off staying in those initial markets, because demand was strong, which means that, they continue to rise up. As you step back a little bit and think about both for yourself, but then another investor, someone's listening to this right now who's like, oh, okay, I
hmm
need to just look in different markets and buy more properties. And that's a great way to scale. What are the drawbacks and concerns? I heard you talk a little bit about travel, but if you could go back or if you're talking to someone who is thinking about following that path, what advice or feedback would you give them before they make that decision?
yeah. I mean, look, I would say that you have to understand, especially when you first start out, right? Because that travel's on your own dime. You're not trying, it's not like it's being billed to a deal, right? And so you got to invest a lot of time to learn that market. Every market, they're gonna, I've done deals where you're like, well, we're only a mile away from Trader Joe's. It looks pretty good because I usually you think you can tell the neighborhood by the retail, right? If there's check cashing and pawn shops and massage parlors, it's probably not like the best neighborhood. And if you're near Whole Foods, you're probably safe. But that's not 100% accurate, right? I mean, we did buy a property that was pretty close to a Trader Joe's and some pretty nice retail, and it turned out that it was in a rough neighborhood. And the locals know, the local guys, they know that that pocket is tough, right? But the guy that's new to a market, you don't. And so, I think that's the biggest thing to understand is really understand the nooks and crannies of the market. You got to spend time out there, real time on your own dime. And that's what we try to do. And of course, we've made mistakes. Um, but the market was good and we did fine on those mistakes, but those are good lessons learned early on in our adventures. And then you also have to understand, like, the pay and the costs can be really different in different markets. Washington, it's got, I think, $15 minimum wage. And your cost of labor is much higher in Washington than it's going to be in Nevada. And there's sales tax on services. So your contractor who might do a service for 10 grand, he's also going to charge you like 8% sales tax. And so those little costs, you really need to understand difference. Arizona's got sales tax on rent. And property tax is different everywhere you go. And so, there's lots of complexity. It's not necessarily transferable where you go. And it's better to really spend time and learn those markets ahead of time than to learn them the hard way.
That was great insight. And I love the shorthand hack there. When we first launched this podcast, it was originally called Target Market Insights. And on a lot of our initial episodes, we talked about how to find the best places to invest. And one of the hacks we came up with was what you just said. Look at retail. And we leaned a little bit more to the restaurants, right? Especially
Yeah.
fast food. Is it more Chipotle's? Is it, Panera Breads? Is it Taco Bell's? Is it KFC's? Is it McDonald's? What exactly are you seeing there? And that'll give you a little bit of an indication of kind of
Hmm.
that neighborhood. And just from a class standpoint, right? Is it A class area, class B, C?
Yeah.
That gives you a little sense of that. So a really good sense to, if you're trying to learn an area, sometimes Google Maps is great. You could just pull it up, see what stores
Yeah.
are nearby it. And that gives you a high level view. But high level is not complete research. You still need to understand and talk to locals and understand, hey, what
You
about this
really
street in
do.
particular? And what is this neighborhood like?
Yeah, because this little pocket, again, it was like a mile away from some pretty good retail, but adjacent to it was, and it didn't look too bad, but it was a like a select service hotel, and it turned out that that was just a pocket of crime.
Mm,
All the bad
yeah.
crimes that can happen in a hotel. Apparently, they were encouraged. I don't know, but yeah, whatever. It worked out, but you learn things that everybody else seemed to know, but we learned the
Yeah.
hard way.
Well, and I think that goes down to as well is like if you're going to invest in different markets, you have to have strong boots on the ground.
You do.
And you need those people who are locals on your team who can help you navigate that and help you understand, hey, this part of the tracks, not that part of the tracks, or you want to be here, not there, or hey, you need to really adjust your expectations because people here really prefers one bedrooms over two bedrooms, right? Whatever
Yeah.
those nuances are, you need someone
Hmm.
who's local who understands that because that's going to help protect you in any of these investments there. The thing I'll say too is we're talking mainly for an active investor looking to find these deals. But as a passive investor, I know a lot of LPs like diversification. They want to invest in deals, not just in Texas or not just in Florida, but they want to have some deals or their money invested in deals across the country. I think there's a lot of advantage in doing that. What do you
Hmm.
say to your investors who are looking to invest and maybe want to invest not just in the same city every time?
Yeah, I mean, what I find with our investors, they really just trust us, and if we say, look, we really like this deal in Spokane, here's why we like Spokane, and we give them the list, and they say, what, you've done well for us, we trust you, we'll give Spokane a try, and so they look for diversification, and I think they do like that we're in multiple markets, but we're, like I said, we're mostly deal driven and not market driven. And so when we say we like this deal, they seem to trust us that this deal is good, and we've looked all over, and this is the best one that's good enough to bring to them and ask for their money. So I do agree that it's a smart thing to get that geographical diversity, but from our investors, what we're primarily hearing is bring us the good deals where you find them, and that's your job to go scour the country.
I love it. And that's the benefit of being a limited partner, right? To be a passive investor, you don't have to worry about, doing all the market data and going through and analyzing 50 different cities or metros and determining which ones are ripe for investing. You want to have some high level sense of, hey, this market has some challenges, this market's really popular, but you really are betting on kind of the operators to say, you know what? We trust that you all are going to find really good deals. I know you're out there hunting. I know you're looking. I know you're analyzing a bunch of deals. We like the way you work, and when you find one, we want to work with you on those deals. So I think it does come back to relationships and being able to build that rapport and build that trust with limited partners, particularly if you're going into markets that maybe they're not as familiar with, but they're really banking on kind of your familiarity and then also the knowledge you're able to pass along to them. Let's talk a little bit more on the your background really in digital marketing. I know you do some capital raising as well, and I'm
Yeah.
assuming that digital marketing helps you. I know it helped me a little bit. So talk to me a little bit more about kind of that process as far as being able to scale and get in front of more and more investors.
That's something we really work hard at, and we still struggle with. I do think that a lot of people start in this business, and they might have some maybe family relationships that have a little bit of wealth, or they worked for a bigger firm, and they kind of have developed, as an employee, some relationships with capital. But David and I, we really started with nothing, and we were lucky enough to be introduced through a broker to some relationships, and then we've just kind of grown organically. So we do, you know, our online marketing, is mostly through social networks. LinkedIn. I try and post on a relatively frequent basis, and we get some people that read what I write. Um, I try mostly to have my content be something that's a little different. I try. I feel like there are a good number of people out there, and they're posting about the general benefits of multifamily investors, and they're not wrong. I mean, there is the tax benefits and the cash flow, and you do build wealth. But I feel like a lot of those voices are saying the same thing. So I spend time really trying to think, what can I say that's different, so that maybe it'll get a little more attention and that be a little differentiated from a lot of the other noise. Um, but really, we have grown mostly through word of mouth. Most of it is our investors that have done well with us over the past few years have, we they've referred their friends to us. And then a company times where we're short on cash, we'll be like, do you know anybody? Where we've had to proactively ask. I think people forget to do that, where it's like, what? Do you know anyone that might want to invest? I mean, at least for us, like that doesn't come natural. Um, and so just those people that trust you, they're going to be the best ones, because to for people to just reach out, and you're just another person on the internet, and say, I'm going to trust you with the money I made, the money I paid taxes on. I mean, that's a big ask, right? And we really care about those people, give them a good return, because they worked hard for that money. But it's all of the above, because it's a big ask to get somebody to part with their money. And so we do, our digital marketing, but we also really just try and get to know people and use a referral network, which has been our strongest, you know,
I
source
think the
of
thing
income.
that's cool in it seems obvious, right? But sometimes the obvious answer isn't quite as clear. But you're building relationships, right? So social media is
Hmm.
a platform, it's a mechanism to allow you to connect with people, but you still have to focus on building that relationship. You still have to get to know them. You still have to
Yeah.
understand what they're looking for. You still have to kind of earn their trust, as you kind of alluded to. And then from there, maybe you can get referrals if you do right by those people, and they feel good enough to say, hey, yeah, I've got a couple other people who may want to invest with you. So it's a process though, and it does take time. You mentioned on the content that, you kind of take a little bit of a different approach than the people who simply highlight the benefits. Give me a little more context of what you mean. Like, what are you talking about in some of your posts, or what are you trying to highlight?
So I try and think of something that maybe an insight that maybe is different. Like if I see, like recently I just posted that, I tracked a REIT, right? And there's a multifamily REIT in the Sun Belt, and there's a multifamily REIT focused on the West Coast, core markets. And most REITs, like multifamily REITs, will trade, alongside each other, kind of
Yeah.
and there's been such a divergence in those. And I'm like, that shows something. That shows investor appetite, that the core markets, they've actually, if you invested 5 years ago, you would have lost money. Whereas you would have made like 50% return by investing in a REIT in the Sun Belt, it's shocking to me, because most REITs really go in lockstep with each other. And so I think that's some fundamental insight. Or I'll say, something about that I see that maybe, is different, like when the prices, because I don't know how about you guys, but we use a lot of floating debt. And when you have floating debt, you have a rate cap, right? And all of a sudden I saw that you get a daily price of your rate cap. I saw like rate caps that we bought for 10 grand, all of a sudden we're worth like 200 grand. I was like, what is going on? And so, your average person's not going to necessarily have that insight. And so I try and share some of that. Maybe it's a little inside baseball with whoever's reading my stuff.
Well, but I think the thing that's cool is this, though. You are educating people, but you're also demonstrating the depth of knowledge you have in the space, right? Because you are looking at these numbers, not to go too deep into the weeds, but that SOFR index is one that we certainly were monitoring until it got to our rate cap, and we said, all right, well, we're at a rate cap now, so I don't have to monitor
Yeah,
it every day now. But for a while
yeah,
there, I was looking at it almost every day or every other day, like, ooh, it's getting closer. But
yeah,
but those are the things that you have to pay attention to as an operator. I think any
yeah.
investor, you want someone who is kind of hyper focused on these kind of things because it can let you sleep at night knowing that they kind of have that covered. So I think it is very, refreshing to hear what kind of content you're putting out there, why you're putting it out there. These are the things that interest you. And even if it doesn't interest the person who's reading it, it lets them know that, hey, I know this guy at least is paying attention to interest rates and understands how these interest rates impact, the pro forma and the projections and the business plan. So really good insights right there. I want to go back to a question I meant to ask you earlier. You talked about going where the deals are and buying deals in, all these different states, Utah, Texas, Arizona.
Mhm.
Um, how are you finding these deals? Are you building broker relationships across these different markets? Or do you have like a direct to owner campaign that you do? Talk to us about how you're actually finding these deals, considering that they are spread out across the country, or not the country, but at least in the Western region.
Yeah, it's mostly broker deals. I mean, it's through brokers, right? So we hardly ever participate in call for offers because there's always a guy that's got either a lower cost of capital or more optimistic assumptions. I mean, we find the call for offers, we just get our butts kicked every time. And so it just doesn't feel like a good use of our time. And you don't really want to go out to your investors and be like, "Hey, I got this deal at 10 million bucks." And everyone gets all excited and jazzed up, and then you're like, well, we didn't get it. It went for 12 million. Sorry. And so usually we network with investors and we have great relationships with investors and or brokers, excuse me. And when they have something that, the word off market is kind of, it's not really off market, right? It's a, I would consider it an open listing, right? Where they don't have a listing agreement, but they got financials and, they're going to call. And so I do try and be a very clean buyer, right? Try to not retrade and just make it easy on the broker. And so where when he gets maybe financials on the deal, I'm one of his first couple calls, right? I know I'm not his only call. He'll tell me I'm his only call, but he's a liar. That's what he does for a living. So, but I want to be on this first, call, and 9 times out of 10, it's the seller or the owner's got an unrealistic price. But once in a while, there's a deal and it works. And the nice part about the that process for us is at that point we're negotiating one on one with the seller, and you get a sense of is this a deal we can get under contract, and it gives you time to sort of socialize it with your investors, right? And say, is this a deal that we like? Is this a deal that they like? And that way you can get the deal done as opposed to just putting in an offer, going under contract, and then hoping you can find the money. So that's how we work, and we there's some really great brokers out there, and the thing, I think they get into the business because they like people and they're good guys, and so turns out I like most brokers. So it's actually part of the business I like. So
Well, and to be successful, you have to, again, be good at relationships. So
yeah.
they understand it's a two-way street. They need a buyer in order for them to, get their commission. And so it does take relationships, and your goal is to be one of the first people that they call. I think that's a really good insight because it's not always about having some magic underwriting. And you mentioned, if it goes to call for offers, you're not likely going to win that. We see that very often as well when it gets into, best and final. We typically are high up there, but usually not the highest. And it's also one of those things where it's like, someone's always willing to pay a little bit more. So you just have to
Yeah.
deal with it. So you do want to get to off market opportunities, and off market is kind of an air quotes thing where it's just not being marketed to the masses, right? It's kind of a
Hmm.
short list of investors who are looking at it. And those are going to be better suited, better opportunities to go out there and find a deal that can work for you and your investors. So just a really powerful insight. If you are looking to do deals, you still need strong broker relationships. That doesn't mean you have to, go for the best and final offer. You have to find a way to build that relationship where you can get that off-market opportunity, take a look and see if it works for you and your investors. So great tip there. For people who
I
want
would
to learn
say,
more. Yeah, go ahead.
to the people out there that are looking to break into new markets and develop those relationships with brokers, I talk to a lot of them, right? And so, and then we kind of laugh, right? Especially when the market was hot. Now things have turned, but a year ago, you talk to the market anywhere, but Utah, Salt Lake, small market, pretty hot, right? Because they've a lot of great fundamentals. And you talk to the brokers, they would get calls like every day by another group that wanted to do deals. And they'd show them a deal and they'd be like, no, 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 we want like an in place, unicorn, right? And so, you have to understand what deals are going to trade at. They're not going to, if you're new to the market, you're not getting the best deal, first of all, because he's bringing that to the guys that they've already transacted with, they know can close the deal. And second of all, you need to understand the market fundamentals. If the market is a 4.5 cap, you're not getting a 5.5 cap that's on Main and Main in the best part of town. You're just not getting it. It just doesn't exist. So you should really go into a market and get to know the brokers, but really understand what the market is, because they're going to tell you what's realistic and what's not realistic. And if you're not willing to pay market price, you're looky-loo, and you're just going to be put in the looky-loo bucket and not giving any attention.
Yeah, great insights right there, especially if you're trying to break into a new market and building relationships. You got to understand what the market conditions actually are, and that's going to change and vary from market to market. So, you can't bring a mindset of investing in one market into a different market, or you may be sorely mistaken or overpay for a deal that you think is a steal, and maybe it's actually a really rough opportunity. So just make sure you understand that, build the relationships, and you should be in a pretty good spot there. Listen, if you want to learn more about Jordan and his company, you can check them out at nextwaveinvestors.com. They've got some information there, and you can check out some of the deals they're working on. Right now, we are going to move on to our round of insights. Jordan, give me a failure or an apparent failure that set you up for later success.
So, fortunately, we've had a few. I would say that, we kind of talked about it, earlier, was that, we bought some deals that we really, really liked the basis, and we underestimated everything. We underestimated, how hard the neighborhood was, how hard the turns would be. If you're in a tougher neighborhood, a lot of those people, when they leave, they're not leaving it in pristine condition, and just to turn it is not going to cost you, $1,000 for paint. You're replacing cabinets, you're replacing doors, they really damage the building, underestimating delinquency. So you really need to understand. And so that was for us. Our first deals, we underestimated all that stuff. And we went into tougher neighborhoods, and we got great basis, and we turned it around, but we were really struggling on cash. And, luckily, we turned it around in time, and we got great exits, and everybody was happy. But we learned a lot. Tough neighborhoods you really got to build in on those expenses.
Give me a digital or mobile resource you recommend for your business.
So, a digital or mobile resource for my business. I'd say that our favorite thing right now that we use it's called Opinion. And what it does is everything that is done, it helps your property get 5-star reviews. And so what it does is, everything you do, a move-in or a maintenance request, it'll send a survey to the resident. And if it gives a 1-star review, it keeps it private. You get to reach out to them and fix whatever you screwed up. But if it's a 5-star review, it asks them to make a public 5-star review. And, when you are turning a building, you've got all that Google history, and you're fighting negative reviews on your building. And so it really helps generate 5-star reviews for your property as you churn it and make it a better place.
I love it, man. I have not heard of Opinion, but we'll definitely make sure you check that out. And is that opinion.com or what's
It's
the
opinion with two I's, OPINIION.
two
Yeah, it's harder and harder
okay.
for these people to find their domain
They're
names.
just
So
they're just making up letters. I don't know how you spell it.
yeah.
Okay. We will check that out. All right. Give me the book you recommended or gifted the most in the last year.
You know, it's pretty common, but I would say the Rich Dad Poor Dad was one of my favorites. And it's not a take it as this is how you make money, but it's kind of a good kick in the pants to get out there and go do something. So I found it really good motivation when I was first starting and getting my first triplex and realizing like this is something that's achievable. For some reason, especially if you're young, maybe you think that landlords are just rich old guys, and you're like, no, no, anybody can go buy a triplex. All you gotta do is a little research and have a game plan. That and then there's another book called Never Eat Alone, and that's really about networking and how to sort of build your network and spend time, growing your relationships and how that can benefit you in your career.
Give me a daily habit that helps you stay focused on your goals.
Um, you know, for me, I'm mostly focused by being disciplined about working out and eating. I do that because if I don't, have the body type that'll get really fat. And I'm at the age where I'll get major health problems. So, but because that kind of gives you a little bit of discipline in everything you do. You have to think a little more, especially as you get older. And so for me, that's really key. It helps me with my energy, but by focusing on one thing, it kind of helps you focus just across your life a little more.
Give me your number one insight for multifamily investing.
So my number one insight is it is all about the people. I see time and time again, especially when I'm looking at deals, people, it's a strange business where somebody that you're paying $25 an hour, $30 an hour could be responsible for a $30 million asset. And so trying to save a buck or two an hour on payroll is always the wrong decision. Get the best people, and that will help your property perform and you execute on your business plan. Those people have a really tough job, and they will make or break your multi-million dollar investment. And so don't drop dollar bills trying to pick up pennies. Get the right people, even if they cost you a little more than you expect.
Great advice right there. All right, you are in Southern California, so I'm going to let you pick the exact location, but give me your favorite place to grab a bite to eat.
Well, it's there's a place in in San Clemente called South of Nix, which is kind of a California Mexican restaurant, and California, you gotta love Mexican food, so we go there at least once or twice a week. So, but yeah, most people, if you're outside of Southern California, you probably haven't heard of it, but it's a good spot.
I love it, man. I love it. Well, listen, you gave us a lot of great information and really enjoyed our conversation, hearing about you going from the military to, being a consultant and starting your own business, and then ultimately getting into real estate and working with other investors as well, starting with that first triplex and now up to 1,800 units in the portfolio. And just talking about how you built a portfolio, how you identify markets, some of the challenges that you've seen in scaling this business, but then also understanding what it takes to get a deal done in today's environment. And I think those are just some great insights because a lot of people are searching for that unicorn, right? That perfect deal.
Mm-hmm.
And the reality is when you are a newer investor, it is even harder to come across that deal. When you have some experience, you have more opportunities to get that because of your relationships, but you're just not going to get that perfect deal starting out. So instead, focus on, what are your non-negotiables? Let me say it again. Instead, focus on your non-negotiables, and you can find deals that work for you that way, as opposed to, just trying to find that deal that looks perfect on paper. So really appreciate your insights there and the conversation we had. Again, if folks want to learn more about you or check out your investment opportunities, they can check you at nextwaveinvestors.com. Jordan, thanks again for being a guest today on Multifamily Insights. We look forward to staying in touch with you.
Yeah, thanks for having me,
And I
John.
hope you have a good day.
Fun.
Absolutely,
All right,
man.
thank
Take
you.
care.